Trading head and shoulders using Fibonacci levels. A couple of points for you to note, but let's go down to the bottom here. I like to stock trades, and the head and shoulders pattern is one pattern where stocking a trade is an ideal scenario. And when we pull our Fibonacci's and we're waiting for that right shoulder to form, we want to look for those convergence levels and just wait for the market to come into our environment. And I believe that when price moves into my comfort zone, I believe that the majority of all other traders in the world, where my comfort zone is, it's their discomfort zone. And I like to trade into their discomfort zone in order to be profitable, because you always have to be looking where nobody else is looking for an ideal entry. Now, what I mean by stocking a trade is once price has moved through the trend line and come back to the last level of support, then we are pulling our Fibonacci levels and we're looking for major convergence levels and the opportunities where the right shoulder may form. So here, as an example, we would look for the 62% retracement, the backside of the uptrend line, and the equivalent point to the left shoulder. Hey, look where it went. Amazing. Sell short here. So that's the type of convergence we're looking for. In this Swiss franc 60-minute chart, here is our short-term trend line. Price falls through the trend line, forms a deep base for the right shoulder. It retraces to 38%, and look at this right here. This base right here, 38%, and that base, it spikes up. It actually forms a nice tweezer top up here, then swings down to the 127% extension. And then look at the second leg. The second leg is often a very, very strong leg. Price falls, retraces 38%, and then falls to 162% extension. We also have a divergence at the head. This is a Euro-Yen 60-minute chart. We see price has rallied. These highs here, look how price attempted to move above. The candle closed, the next candle opened, moved below this high, and continued to trade below. Boom, reversal. Break the trend line. Last level of support. Price rallies. This is our 62% level, which converges with this base level at the apex. The base of an apex is typically a level of support resistance, and then price falls. See how price made efforts to hold below the backside of this trend line as well. This is an interesting one. This is a British pound, and we see a nice uptrend. It's an aggressive uptrend. We consolidate for a while, and then price makes one last attempt to move above these clearly established highs, back to the base level of support. 62% retracement converges with this base level of support as well as the left shoulder. So here's where everything is lining up. There's obviously some disparity in here. It's not exact. It never will be exact science. That's trading. Then price moves down through the neckline to 127% extension, then down to 162% extension. And on the big swing, from the very high down to this low, price retraces 62% and then falls. 162% of the big swing and 262% of the original swing. Another British pound chart. This is a little bit more exemplary of what I like to see. And we see these wild swings. Here's our short-term trend line. Price spikes up, consolidates, then rather than consolidating through the trend line, I like that it came lower. It came below this level of support and moved through. That's very positive for the bears. Back to the base level of support. We spike up. British pound loves the 50% retracement, but there is price does make us an errant move up here to this, just testing this last level of support here before taking its down move below the lows, 127% extension, continuing to respect the lows and the 10-day moving average. Price takes another leg down to 162% extension, rallies and respects the lows, and consolidates. Keeping in mind that as the head was forming, we were also forming a MACD divergence, which further supports a potential reversal should this trend line break. Japanese yen 4-hour chart, a nice long time frame for us. Price rallies very aggressively, falls equally aggressively, retraces 138%, which is just below this consolidation here, but this is just an example of how you need to be flexible. And this 38% retracement is also capped by the 10-day moving average, and then price falls to 162% extension. And look at this one. Look at this wick down here. That's very nice. And then we retrace to the neckline, and we bounce at the neckline before it runs amok.